Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, I'm back again 2 times in 1 week here on YouTube. I know it's nothing short of a miracle. So this time we're going to be looking at Bitcoin. We're going to start here on the BLX, the Bitcoin Liquid Index, and we're going to start by discussing the long-term picture just for 5 minutes, just to bring up anyone who's new to the channel up to speed and to give a quick refresh to anyone who's been away for a while. So just going to clear away our Elliott Wave count for a moment, and we're just going to break down this picture into the simplest way possible, which is by bringing up the well-known market cycle, where everybody refers to this 4-year cycle. So essentially, I'm saying, along with anybody else, or the vast majority of people over the long term, which is Bitcoin is in a massive bull market. It has been since its inception at the end of the global financial crisis. It has continued to make higher highs and higher lows over that last decade and more, and continues to do so, and is off to new all-time highs as we speak. That is essentially my long-term view. That is essentially the strength of the long-term trend and what I believe is happening over the long term. So if that is correct, we can see the various major corrections we've been in over this time period, and we can also see their corrective form as well. In this case, they're all sharp corrections, essentially zigzags or alternate or versions of zigzags, and we can see how we had an 86% correction during the bear market of 13 to 15. We had a 84% correction of the bear market of 17 through 18, and we've had a 77% correction of the bear market from 21 to 22. Now we can block these into what we call our crypto seasons. As you can see, those major corrections are what we call crypto winter, and that is essentially the bear market in its entirety. We can also see that the length of the bear market in general, it's not an exact science, but it is roughly a year. 413 days here, 364 days here, 378 days here. All between 70 and 80, a little bit over 70 to 80% declines, the more severe ones being in the mid-80s, and essentially roughly making up a year of the 4-year cycle from low to low. So if the next 4-year cycle turns out to be correct, we're not psychic, we don't know. Cycles are there to be broken. They do eventually end, they do eventually change. But if it holds in place, then the next cycle is due to bottom in November 26. And we could probably expect, if things continue as before, or roughly similarly, then we could be looking at another year-long bear market. So from November-ish 25 down through to 26. So if we were to just pop a line on the chart here momentarily to just get into view that long-term picture, that means we've got from here to here, okay, in time frame, to get all of summer and autumn, the topping period of Bitcoin, out and complete, and then have a year down into the bear market. So we've got into this area here being between where the arrow ends of this line, and here the market bottom in 26 being the bear market. Now obviously this is all just a guideline. It's been relatively accurate so far over the last few years, so I'm loath to discount it. I won't discount it, but I won't lean into it either and say that it's the be all and end all. I just think it's another piece of analysis that should be included. So how do we explain this from an Elliott Wave point of view? Well, let's bring up our Elliott Wave count. We've identified the sharp structures of these major corrections of 80% or more, or less in some cases, which comprise of these 1-year-long bear markets within this 4-year cycle. Now, since they are all sharps and there is no alternation between any of them, and this one overlaps into the prior wave 1 territory, we know that this literally cannot be an accompanying wave 4 to this pivot here. It is not only not displaying any alternation, it is actually overlapping within the prior structure, so that discounts that as being a wave 4. This here being a shorter time frame than this structure here, and also the most recent one, and also a sharp structure itself, and also a severe decline with no alternation, suggests to me that it is actually a smaller wave degree of this prior correction, which is also itself a sharp structure of another severe decline of 80+%. So I see this as cycle wave 1 into cycle wave 2, super cycle wave 1 into 2, cycle wave 1 into 2, primary wave 1 into 2, and now working on intermediate wave 1 into 2, having done minor 1 and minor 2, minute 1, and maybe minute 2. I'm not sure yet. This is still up for debate as to whether this is intermediate 1 into 2 or not. I honestly don't know. It's basically impossible to judge, because let's just remind ourselves that when we take the chart off of log and look at it in linear, it looks like this, and therefore it's very difficult to get a sense of scale as price develops over time. We can only really get that sense of scale when we look back with hindsight, 2020 vision, into the past, and then say, well, obviously that was the wave count. Now, we do our best to project it forward, but we have to, as long as we're counting correctly so far as structure is concerned, we can forgive ourselves a wave degree above or below in terms of guessing exactly where we are. So anyway, that is how I see things over the long term. That's my bullish bias and that's my preference. Now, that does not mean that's the only option. The alternative is that we've peaked in November 21. We have completed a W down as part of... Now, this is something that's been brought to my attention. People saying you can't have a multi, double, triple zigzag within a W wave within a larger double zigzag, and it's like, I see absolutely no reason why this can't be the case. Having read through the source material many times, I've been very familiar with it, been practicing Elliott Wave for a long time, and this is classified as a zigzag structure. It might be a multiple of zigzags, it might be a double or a triple, but it's a sharp, it's a zigzag structure. And if we are not going to expand to a new high, such as in a flat structure where we have 3, 3 and then 5, and we're predicting a series of zigzag structures, there's nothing to say that you can't have a multiple zigzag as one of your subwaves. So W, X and Y with a simple zigzag recently completed at a bearish high here and potential pivot, and then now a move down in another zigzag. So if this were to be correct, this is a bearish count, not the bullish count, mind. If this were to be correct, then the long-term targets I have for this, if we were to come down into this demand zone, these overlapping points of control within the prior big bear market we had back here, the target fibs based off of these pivots 1-to-1 is bang on the 89% retracement, so basically a fib number. That's a linear measurement. We also have down here, that was the target zone I think for those fibs. And also we've got major support down here, and we've got our golden zone retracement, which overlaps the 89% linear retracement and that 1-to-1 target for what is essentially just going to be a giant channel down to here, free wave move. Now, if it were to take roughly the same amount of time as the first move down did from here, we'd be talking about the whole year being a bear market and going off to new lows. But we'd be talking about ending somewhere between 8,000 and 12,500. Right? 10 grand seems to be the most popular idea with the bears. And you know what? Part of me secretly hopes that they're right, because I would not turn my nose up. Sorry about that. I'm sure I put that on mute, but apparently I did not. Bear with me. I don't know, they're not worth the trouble they cause, are they, really? But there's no going back now. Shut up. There we go. So, as I was saying, what was I saying? Yes, the 10 grand figure seems to be the one that's most popular with bears, and if it were to happen, I wouldn't turn my nose up at it, although my own bias is bullish. So let's come off of the bearish count and into the bullish one. So, primary wave 1 and 2 now complete, using the same multi-zigzag structure for the correction. Minor wave 1 of intermediate 1, expecting 5 minor waves up to complete. Wave 2 of that now completed as an expanding flat. That 8 should be over here, sorry. 3 into the 8, 3 into the B, 5 into the C. And then we've had 1, 2, 1, 2, 3, 4, 3, 4, 5 into a wave 1. A potential completion of a flat pattern into the minute wave 2. Not sure about this. We're going to come into the smaller time frames and have a poke around 3 different bullish counts to explain this. I wish I could pick one and say that I had the most confidence in it, but unfortunately I don't. But what we see is a very strong weekly close last week with a big bullish hammer with a long wick to the downside, and then move higher so far this week, but not a really strong move. But then again, this was a very powerful weekly candle. Now, it wasn't necessarily supported by volume. It was not stronger than the weeks prior, so it's should be taken with a grain of salt as a reversal signal, as it didn't really have sufficient push from volume. But that's just a bit of a trend that we've seen across all of these growing crypto markets. As price continues to recover and move higher, volume just isn't really as present as it was when price was trading at a discount. That's true normally of all markets, but generally it has been a little suppressed. So more important than looking for the overall amount is looking for if the individual pivot or reversal is supported by volume, and in this case I'd argue it's not. So yes, it could be a reversal signal, but it's not the strongest. So if we now come and have a look at our weekly moving averages, we can see that we're above the 10, the 20, the 60, the 250, all are now trending higher and pointing up. That is fundamentally bullish and supportive of a bullish thesis of a bull market. We can see how on the RSI, the weekly RSI has started to trend down, building up a significant divergence at these highs, a bearish divergence. Okay, now it's only slight on the weekly time frame. You might say, well, it's significant here in the RSI, but when we look at the actual weekly closes, they're basically flat. They're basically level with one another. So it is still divergent. You know, if you have a level here and two lower highs here, that is divergent from one another. But we didn't get a weekly close up here. Now it's more significant when we look at it on the daily time frame. It's more obvious as it does happen between the closing prices. Here on the MACD, we can see that bullish momentum has waned off completely. We've got a little red bar on a histogram for last week, and we've got a threatening average for the signal line crossover here. Still ranging above this little area here on the weekly on the weekly ABV. Maybe coming back to test this. It's possible. But yeah, we're looking like we've topped out in the meantime. Now, it doesn't mean we can't turn this around and continue roaring higher. It wouldn't be the first time that's happened, but we are showing signs of weakness here at the top. So we should be mindful of that. Now, if we come down to the daily time frame for a minute, we can see once again price currently today trading above the 10, the 20 and the 60 exponential moving averages, with the 250 well below us. Now on the daily time frame, we've had a swing back with the average through the signal line and an increase in bullish momentum. OBV is flattened out. So we're in a position now where we've either finished the sideways consolidation, or we've temporarily consolidated a counter trend move to a new downtrend, and we're just waiting to roll over again. Between these closing highs here on the daily time frame, we can see that we get a much more obvious and significant bearish divergence into this high. So this has the classic behavior of either a weak fifth wave just breaking above the top of the wave 3, or an expansive B wave, which we know as a head fake. So we get a rally into a new high and then a sell off to a lower low. So it has the behavior, the hallmarks of either an expansive correction or a trend reversal. It could be either. We had an extended wave 3 at this degree, so you could argue that having a short wave 5 makes sense, but it's often the case that the fifth waves in cryptocurrencies are actually very strong, but it often also depends on where they occur. The threes aren't that strong until we get into the wave 3 of each larger wave, and we're not in that yet. And it's often the same with the fifth waves, tend to get much more expansive later on in the cycle and more aggressive as we fly off into those peaks. So these early steps, these 1s and 2s off of the lows, tend to be a little bit more, timid, and just generally lacking any real convincing, truly convincing bullishness. I mean, I'm not saying it hasn't been bullish. We've come up to very high readings on the RSI again, but it's not the crazy bull market behavior we're used to when we get into those wave 3. So on that note, let's now come over and have a look at the shorter term counts. So we'll cover the bullish and bearish counts here. So let's just go through them in the order I've got them. I don't think there's any particular reason why I should do them in any other. So minor wave 1 of intermediate 1 complete. Minor wave 2 of intermediate 1 complete. Now in minor wave 3 of intermediate 1, which could be complete up here. Now there are issues with this. The wave 3 is legitimately longer than the wave 1. doesn't have to be longer than the wave 1, but it can't be the shortest. It comes further along than the 123.6 and the 131.8 extensions, but it does not make it all the way to the 1618, which is where we really expect to see a wave 3 in Bitcoin or in any crypto really reach. So if I just show you what I mean, we just fall short of the 1618. We come to the top of this pitchfork where we bump into resistance multiple times. Just as we bumped into the median line as resistance here, then back tested that median line here for support. We've come back to the median line again, found support, and we've come up here. And we've bounced pretty convincingly. Now, what we've done here, though, is we've bounced. Looking at it from my eyes here, when I first look at it, it looks impulsive. It does look impulsive. So you can quite easily imagine now there's 1 and 2, that is 1 and 2, that is 1 and 2. That is 3 and 4, that is 3 and 4, that is 3 and 4, and that is 5. Okay, so if we were to just look at it as a simple impulse, we go 1, 2, 3, 4, 5 waves up. Okay, and if we go from the 1 to the 3, down from the 4, we can see that it channels nicely as an impulse as well. Right? So it just looks impulsive, it behaves impulsively, seems to have come up in 5. So if we are correcting, leading with 5 suggests that we're not done. Right? We're either going 5, 3, 5 for a zigzag and then coming lower, maybe seeking out the bottom of the pitchfork. If we do, we can't come back lower than 31,064, 31064, because wave 4 will then cross into wave 1 price territory, and that can't be allowed. So this is one of those counts which is probably the least favourite, my least favourite interpretation from the bullish perspective. So what we'll try and do today is pick a primary, pick an alternate, pick a second alternate, since we've got 3 counts on the go. I wish I didn't, but sometimes, especially when you get these tops, all these higgledy-piggledy messes, often with lows in crypto as well, it's just bloody difficult to figure out what's going on. Excuse me, I almost choked on my coffee. So the next one is the idea that I mean, this could be 1, 2, 1, 2 minor, minute. I've just got it as intermediate into minor, just for the sake of making the labelling easier. Now I had an expanding ending diagonal here, 1, 2, 3, 4 and 5, right, to complete the 5th wave at minuet degree of minute degree 5 of minor wave 1. So far we have failed to retrace any deeper. We haven't even made it to the 50% retracement yet of this move, right around this volume node here, right around this price demand, right around this price support level. So we haven't really come down very far at all. We could be done, but it's a very shallow correction. So you can look at this as A, B, C complete, or WXY complete, depending on how you want to count it. This is 5, this will be 2, and off we'll go to new highs. Okay. Alternatively, now that this appears to be 5, another bet would be this. You come down in an A, you're going to go back in a B, right, 5, 3, 5, and then you're going to come down in 5, maybe into the golden zone, into this price structure here, between the 50 and the 61.8, and then that will be wave 2 down here complete, and then we will resume the 3 of the 3 higher. So there's another idea. Right, save that, and then we've got this idea. Back to 1 and 2 at minor degree, 1 and 2 at minute degree. This is the idea that this is a head fake B wave, and we made a new high, and it was a corrective high. The idea that this is a corrective high is actually quite believable. Yes, we do get that expanding structure where we can get a expanding diagonal in to finish, so we can get a motive structure into the high, but we can also get a corrective structure into the high. Okay, where we swing high in a B wave, and then we come down in a not so pretty but believable 5 wave structure for a C, which extends beyond where the A completed and comes to a pretty significant expansion of the wave A. If I remember it goes not quite to the 2618, but it goes well beyond the 1618, so it's a big C wave, but then again it's a big B wave, much bigger than we would normally expect. Now all the bodies of the candles complete prior to that 1618 cutoff here, right? It's just wicks above that point. Now, if I saw bodies of candles on the daytime frame significantly closing above that level, I would be very suspicious. I wouldn't really want to call that a B wave, as it's just very uncommon for a B wave to expand within even an expanding flat that far. But that's not the case. It's basically just intraday, intra-hour pricing that took us up to that high. So this is essentially the most short-term bullish count. You know, bar forcing a zigzag into here very, very quickly, what this does is gives us a more substantial period of correction in a free wave expanding structure, which took not a lot of time, but a lot more than the idea of this high to this low being complete. You know, it took 45 days, long enough to suggest that it's a minute wave correction of this minor wave 2 here. This is a minute wave 2 as opposed, you know, to a wave 3, as in 1, 2, 3. This is just another 1 and 2. So if that's the case, we are looking for a retracement off of this 5 wave move to the golden zone, which we're not that far off now, the 50 to the golden zone. If this is indeed 5 up and complete, we're looking for 3 back into here, and then we'll move higher in a 3. Of the 3, this could probably be labelled either sub-minuet or minuet wave 1 into 2, and then we'll be off to new highs. Above this high, I mean the B wave high, and we'll continue higher again, until we eventually complete an intermediate wave 1, and then get our first proper correction of this new bull market. So you can see why I go back and forth between this being intermediate degree and minor degree, because if we've only got 4 years, less than 4 years now to the next low, we haven't got much time, really. But then again, you have to remind yourself, I feel, when you look back at the chart, you have to remind yourself that you spend an awful lot of time in winter and spring and early summer, and then very little time on your way to the highs. You know what I mean? You build a big basing structure, and then you moon. Big basing structure, and then you moon. So if this is going to be eventually 1, 2, 3, 4, 5 big basing structure, and then you moon, we've still got time. You know, if we're going to get a really nasty correction like that. Alternatively, we've already done 1 and 2 at intermediate degree. We're in 3 already, and the only thing we're going to be looking at is retesting the prior highs before carrying on. Right? So that could be kind of a big deal, really, couldn't it? But yeah, either way, I digress. So they're the 3 bullish counts I've got, and you know what I'm going to do? Since... which one do I prefer the most? The technician in me, who wants to see a sharp correction here, wants to see a significant retracement back into the 50 to the 61.8, and gives me a clear invalidation of the previous high. I'm just going to assign primary to that, because it's the one. If we go to another high from here off of 5 up 3 back to a new high, I'm going to assume that that's a new impulse going higher, and it will invalidate this count anyway. So that's what I'm going to do. I'm going to say that's primary. 49.48 actually, like so. Don't worry, if you're lost, it'll all make sense shortly. That's the one. Bullish primary. The next one I'm going to choose is the expanded flat as my alternate. 1, 2, 1, 2, complete, and now we'll move higher. Right. So this idea gets invalidated at the other end, and that's why I'm choosing it as an alternate, because basically what this does is it gives me a range between the prior high and this current low we've set, and that will knock out 2 counts as they're currently interpreted. See, so it just makes it easier to come back to in a short period of time and say, well, yeah, they were both wrong, so let's go with option 3. But I might as well, if I'm going to be bullish, I might as well be bullish. Bullish alternate. And then this one, the idea that we're into a 3 and we've got a 4 that's going to take longer to complete and won't invalidate all the way until we get down here at 31.064. Right? So let's say bullish second alternate. And there you go. I'll leave that for the bullish count. That's my primary. I feel, given all of the divergence into this high, the bearish divergence, the rolling over on the weekly time frame, it just doesn't feel like we're done yet. Feels like we've got to come deeper. It feels like we've got to come down a bit further, right? So we've come down here. We've got three-wave correction. It may be done, and that's just disguising. This impulse is actually a disguised double zigzag, but it doesn't look big enough to me. So 5 up, 3 back, 5 up again into a corrected B wave, 5 down into a C wave, somewhere between the 50 and 61.8 into this prior structure, perhaps even testing all these prior highs back here. Right, because we know that if we take a longer term VRP, VP, can't speak, excuse me, fixed range volume profile, what I'm trying to say. We know that all of this volume node here, this is all the prior highs, this is all resistance, this will become support. It's sat somewhere around the 78.6, maybe you want to dig into it a little bit. If we get a really deep correction, come back into all this as a base and then shoot off higher. So maybe I'm just being greedy and I just want it to come down deeper so I can buy more. It's probably the case, to be absolutely honest with you, but it is technically the most sound, because if this is wave 2 nesting structure, smaller wave degree of this wave 2, it kind of should come back into the same price action. Doesn't have to, but it's very common. So wait to see if that happens. Bullish alternate, we've already completed 1 into 2. Everyone's bearish and it's actually going to go rocketing higher. Yeah. And then we've got a second bullish idea, which is we're actually in a wave 4. That can't invalidate until we get past 31.064. So now that we've looked at the bullish counts and assigned primary, let's have a quick look at the bearish count. Bearish count is that we've completed our X wave before we head down to 10,000. Right, A, B, C. This has gone beyond 1-to-1. You know, this has gone beyond 123.6, it's gone beyond 131.8, it's almost at 1618. I really don't want to entertain the idea that this is going to get any longer. As far as zigzags go, this is pretty much as far as I'd want to see a C wave go. Go much further than this and you're going to start getting some really peculiar structure which doesn't look like a free wave pivot anymore, doesn't look like a free wave correction anymore, won't channel like a free wave correction anymore. You know, and on that note, we can see how it's not behaving like a corrective channel anyway. We've breached that channel, we've bounced off of it and moved higher. That looks like a base channel for a bullish count, not a corrective channel for a bearish one. So that's why my bias is bullish. Well, one of the reasons. So if that bearish count is correct, we are now looking for a short opportunity off of here, right? And if that's your bias and you are short and you are bearish, then you are at the 50% retracement now. Right in the target zone, back to the 50, bump, 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 3 highs, back at price support, becoming resistance. You are in the likely probability of turning down from here. The one thing you've got against you is you've led with an impulse. Right, so the idea of this being completely over, it could be W, X and Y. But that middle bit seems to look like a 3 to me relative to this length here. Okay, and this length here, this long bit in the middle, that looks like a wave 3 to me. And therefore this has the feel of an impulse, which means it's more likely that this is A, this will be B, and this will be C, and that will actually be your short from here. Right? But in the meantime, if you were convinced that you've pivoted, excuse me, at the 50, then you've got a very low risk trade at the moment of 2.82%. That's where your stop would have to be, plus a little bit of plus the spread from your broker, plus a little bit of slippage. But generally, that's where your stop would have to be. The next stop you've got, that's the structural stop, is the prior high, which is 15% away, which is a little high. But you might get another opportunity, right? You might come into here and then get your STS, 5 down, 3 back, your first move off of the high. Or you can choose an arbitrary stop once you see a pivot form, in which case you could get as small as 1% or 2. Maybe, depends where you want to get in from, 2% or so. We don't know what we're going to see until we see it, but that's essentially what you're looking for from a bearish point of view. You're looking for You believe this is an impulse down, you believe this is going to be a correction up, and then we're going to go to new lows. Right, so that's how you should. I'm not saying that's how you should, that's how I would look at it if I was being bearish. I'm not, but if I was being bearish, that's how I would look at it. So, essentially, the bearish count's the only one that hasn't got any competition with other bearish counts because it's self-explanatory. Right, we've completed a zigzag and we are going to collapse from here. Now, if we continue to meander around and slowly come down and back up, you know, we should be going 1, 2, 1, 2, off we go. And we should rip down here. Volume should increase. Bearish count should really start to form over the next few weeks. If we come back into this price structure, we know we can discount the idea of it being 1, 2, 3, 4 because 4 can't come back into 1. We know that once the severity and length of time of a subwave within inside its parent structure gets too extreme and breaks all geometry related to it, pitchfork, basing channel, the lot, it's getting suspicious of being a smaller wave degree. So the bears, the deeper they push it down, the stronger they're going to look. Okay, the stronger this count's going to look. If we swing to new highs again from here, the bears count is really getting stretched, and if we continue to impulse higher over the coming months, it's wrong. So yeah, there you go, guys. I think that's really all I've got to say at the moment, bar pointing out I'd have to just be fiddling around with some channels and stuff. There's nothing else to really talk about. I find that quite telling, and I've cheated here. I should really take that low as the basing structure. So if I were to just do a clone of that and move it to that height, you can actually see the back test of that channel, the green channel now. It's actually all of these highs here, right? These highs, these highs, these lows. And we haven't come down to it yet. So you could argue that we're going to do something like this. Before moving higher, we're going to come back into this structure. But the one thing that we can point to is that if this was supposed to be a correction, then that would have been the likely completion point for an ABC. Right, and now that's assuming taking these two lows for the base channel. If I take the corrective channel of what would be A into the bottom of the B, with the beginning of the A, which is what the blue channel is, then we would have expected to have completed here, but all we found was resistance, 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 breakout, back test. You see, now it doesn't mean that it can't be an extended C for the bearish count, it just becomes less likely. A corrective channel which breaks to the upside and gets back tested is by definition a base channel, and that's what we have at the moment, and therefore the supportive count, the technical support is for a bullish count at the moment. So on that note, there's the one I'm going to pick as primary, 1 into 2, 1 into 2. This solves the long-term time problems I think we're going to face in terms of getting a 3 of a 3 of a 3 as this whole thing gets extended and stretched out. We're just going to run out of time to get all of summer, autumn and winter in before the end of November 26. There isn't much time now. It's 2024, almost February for Pete's sake, and time flies. But I don't like and have never liked just how short a time period that intermediate 2 is. So there's problems. Bullish alternate is very close behind at minor degree, 1, 2, already completed, 1, 2, flat pattern, back testing the channel and resistance to support, about to move higher. And then we've got the bullish alternate, which is the idea that this is 1, 2, 3 and 4. That can't come back beyond 31064. Then you've got your bearish count. We're done and we should start to accelerate. Now if you are a bear, and you got to put your money where your mouth is, because that's the whole damn point, and I don't blame you at all for being bearish, right? Because if that's, we all convince ourselves of what we convince ourselves of, so the time to have conviction is when the maximum opportunity for that conviction to be rewarded occurs, and that's this moment now. That is literally this moment now. You have peaked within around 10% of the high. You're not going to get much tighter risk management from here, so if you want to be short and you want to be supporting that bearish thesis, we've come to target, we've done a zigzag, done everything you need to do to get short from here. Yes, you could get a better setup, as I pointed out, with the potential STS 5 3 5 5 3 down. that could shrink your margin down considerably. But you could take the current pivot, you could wait for the zigzag. Either way, you're still about as close to that prior high as you're going to get. So I've got no problem people being bearish, people being bullish, that's fine. But there's no point yelling at people, I think it's this, if you're not going to back it. So this would be the opportunity. And vice versa for the bulls, right? When you come down to the lows and you get bullish and everybody else is bearish, you better put your money where your mouth is if you want to be rewarded. Worst case scenario, you're wrong and you lose some money, but that's why we have stops and that's why we have risk management, isn't it? So there you go. Long-term count is bullish, and I believe we're off to new highs this year. I'm going to stick my neck out. I stuck my neck out when we bottomed back in November 22, that first 5-wave move out of the channel and up. I said that was the low, that was the first SCS, and we are going higher. We've done that. I think we're going to new highs this year. I'm prepared to be wrong, but I don't think I am. So take care of yourselves, guys, and if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Please feel free to leave a comment in the comment section below, and if you are interested in learning Elliott Wave for yourself, I have a series on my Discord which you can access via joining the Patreon. There's a link to that in the description below, plus a bunch of other benefits you get, including weekly live streams where I look at your requests, essentially. Take care of yourselves, guys, and I'll be back with you the next time I find enough time to do a YouTube video. All the best. Bye bye.